Welcome to the JD Power Insurance Intelligence Podcast. I'm Michael Vermillion with JD Power, and with me today are three members of the insurance practice here at JD Power. So first we have Steve Crutzen. Steve, welcome.
Hi, Mike. Thank you.
And we also have Brianne Armstrong. Brianne, thanks for joining us.
Hi. Thank you.
And finally, Mark Garrett. Mark, thanks for joining us today.
Yep. Good to be here.
Great. So, hey, before we dive into the content, just wanted to take a step back and talk a bit about why we're doing this podcast. So we talk about insurance every day of the week. We talk about the insurance industry, what the trends are, what the challenges are we see for both the consumers and also for the carriers. And so we have a lot of great insights. So we thought that, hey, since we're having these conversations anyway, why not share it with our audience? This also is going to give you a chance to put a face to a name in case you haven't had a chance to work with or meet Mark, Brianne, or Steve. And so that's really the goal for this podcast. So before we dive into the main topic, Steve, want to hit the news. And we have conversations with the media just about every day of the week. So Steve, what's the hot topic? What kind of questions are you getting from reporters?
Yeah, I think all the questions we get right now and have been for months have really centered around everything that's going on with auto insurance premiums. So the media are really focused on how it's affecting the consumer, and consumers are increasingly fed up with now going on a third year of aggressive rate taking by the insurers, what nets out to aggressive premium increases for the consumer. Typically, we're asked questions around what's driving all these rate increases. And then secondly, what can consumers do about it? What's driving it? Just like all other inflationary costs, the inflationary increases that are happening are affecting auto claims. So you think about the physical damage to a vehicle, repairing a vehicle, all the costs associated with that are up. For a good part of the last few years, used car prices were increasing. We're obviously seeing a pullback on that. But when those used car prices were going up and a vehicle is totaled, that insured is paid the cash value of their vehicle, which is, of course, a higher price than before used car prices went up. As repairs are taking longer, the cycle times are longer rental periods for a car to be rented out to the insured while they're waiting for their car to come back. And then this phenomenon that we know of as social inflation, where a lot of collisions now are being litigated. And when it's litigated, it can end up in a judgment or in a settlement. And in the case of either a judgment or a settlement, those are growing rapidly compared to previous years. So all the costs that insurers are paying around a claim have gone up dramatically. And insurers reacted a couple different ways. First was to cut costs. You think about, you're probably seeing a lot less insurance ads, or you have been the last year or two than you saw before. Insurers cut their advertising spend by the most we'd ever seen in the history of our insurance shopping study. They had historic layoffs in many insurers to reduce costs that way. And of course, as we're seeing as consumers, they've gone to the price side of the equation and increasing prices. And there's emerging evidence that they're catching up. So a number of financial results were reported for Q4 of 2023. And some industry numbers are starting to trickle out. The industry numbers take a while to get out at the end of a year. And we're starting to see a better picture than what we saw at the end of last year, the year before, where a number of insurers are now turning the corner and reaching rate adequacy. And when we talk to the media, we mentioned that it may very well be in 2024 that consumers are going to see some rate increases, some premium increases, but maybe not like what they've seen for the last 2 years. And definitely it's going to be an uneven year. Not all insurers are in the same position right now. So we mentioned that when speaking to the media, that depending on who your insurer is, you may see a greater or lesser increase in your premium, and it's going to lead to a situation where you may want to shop and compare premiums more than in the last year or so, given the fact that there will be some uneven premium increases as the year wears on.
So it sounds like a really dynamic situation in the industry, current state of the industry. So stay tuned for more on that. We'll pick up on that topic again next time when we do the podcast again. So main topic for today, we want to focus on the year 2024 and kind of looking ahead over the next 9 months at this point. What are the key trends in the industry that are going to shape the outcome for the year? And more specifically, who do we think the winners are going to be for 24? And then on the other side of the coin, who are going to be the losers, and what's going to drive that? We don't need to name any names, but just more the carriers that are going to have a successful 24. What are they doing today to make that happen? And then the ones who aren't doing that, maybe perhaps that's a wake up call. So, Steve, why don't you kick us off on that question? Thanks.
Yeah, thanks, Mike. Well, when we think about what are insurers doing today that'll make them win in 24, I'll just suggest maybe we look back a couple years and say, what did they do over the last couple years that'll make them win this year? So those that were more disciplined in their underwriting approaches and in their pricing and have essentially achieved rate adequacy at the end of last year, those carriers are more well positioned to aggressively acquire new customers now. So if we think about our data from our list product, where we look daily at insurance shopping, in Q4, we issued a report showing that shopping had fallen off from what we'd seen earlier in the year. And our hypothesis was consumers are coming to terms with the fact that premiums are high across the board. And while they may desire to shop like they did at the beginning of last year, when they do shop, they can't find a lower premium, so they're kind of giving up the effort. When we look at that data for the first quarter of this year, we're seeing consumer shopping's coming back with a vengeance. In fact, we're only halfway through the month of March right now, but the month of March thus far is going to show the highest shopping rate nationally that we've seen in the history of the list data, going on almost 4 years now. So consumers, while they may have spent the last half of last year kind of pulling back from shopping and maybe accepting the fact that premiums were high, they're getting aggressive again about looking for a better premium. And insurers who have been disciplined with their underwriting and are rate adequate and aren't taking as much rate this year may be better positioned to acquire a lot of those new households that are out shopping for auto insurance.
Okay, so shoppers, I like that. Shopping is back with a vengeance. Brianne, what's the perspective on the servicing side of things, and for insurance? Who's going to win this year, and what steps are they taking now to make sure that happens?
Yeah, there are a few things I think that will be very helpful for, the carriers that essentially kind of win right at this. So it's looking at two different groups of customers that they're servicing. There's the new customers, right? The switchers who are finding a new insurance company, whether it's because of choice due to price increases or it's because, they were dropped from their previous insurer. So some of that is kind of how do you service those customers that you're bringing on that are new? And so what we find is that it's really important to build trust up right away, right in the beginning. Trust can be kind of nebulous, right? But there's a lot around kind of setting expectations, servicing customers the way they want to be serviced. So understanding preferences and then matching that. So right out the gate, doing those types of things can really help build trust, setting that expectation that you're going to be a transparent insurance company working with the customer versus, a lot of times these customers have gone through some type of premium increase, right? And so there's a lot of kind of, I don't want to say mistrust or distrust, but maybe a little bit of, feeling a little uneven about the situation. And so trying to build that up right away is important. But then there's a whole subset of customers who have had premium increases. They're staying with their carriers. A lot of them may be dissatisfied. So how do you mitigate that? And really, the carriers that are going to be winners are ones who can get ahead of those price increases, give customers options, right? So looking for things like discounts, maybe even things like, can you change your deductible on your auto insurance so that maybe it's higher and then your premium is less? So giving them options right out the gate rather than waiting until they find out about their price increase from their bill. That's basically the losers are going to be the carriers who have that happen, right? And so you're going to have disgruntled customers who may or may not be able to leave, due to not being able to find an insurer to switch to. But at the same time, then you're going to have someone who's not an advocate for you, right? So carriers who can get ahead of that. And then also, I think adding value outside of the price. So, obviously price is a huge factor, but when, you can't do anything about the price, you have to raise premiums. What do you do to compensate for that? And it's adding other things that could add value. So we've seen a lot of carriers kind of putting out their own version of like a discount program, right? You can get a discount on a rental car. You can, get moving help. You can get all these different things that kind of relate back to the product. And, I think we'll continue to watch this because it'll be interesting to see if carriers who've really invested in that value add piece end up, faring better than those who didn't.
Yeah, thanks, Brian. These are all really good ideas on the servicing side, especially around. I really like the part about building trust with the customers who are new, and then being proactive with your existing customers, especially if they haven't fully seen all the pricing that's going to be coming through on their premiums. Mark, what about on the claim side of things? What are the carriers who are going to win 24? What are they doing today to improve that experience?
Yeah, well, we're seeing some really interesting times, I'd say, right now on the claims front, both auto, homes, and on our I should say, on our auto claims and our property claims. We just released our property claims results, and I'd say the last couple of years, it's like I think in the last 4 years, we've seen record levels of some degree of catastrophic events, right? Severe weather coming through. I think last year alone was the single largest number of these, billion-dollar events that have ever occurred since I've been recording this data. So we're definitely in a situation where there's, a lot, just a steady stream of these events. So no more peaks and valleys. I think it's stressing, both contractor availability, materials. It's stressing the insurers' staffing situation. We just, our last results showed satisfaction's at a 7-year low. So we've seen the industry decline. So I think it's more challenging than ever, I think, to differentiate that service, right? So to become a winner in that environment is extremely challenging. I think the carriers that we've seen excel, I think really still focus on some of the core fundamentals that we tend to message, like showing empathy and concern at the first notice of loss. But I think now more important than ever, though, is really managing those expectations, setting those timing expectations. Like one thing I'll share about the results we just released was that if your claim was within what would be a more normal length of time, say about 3 weeks is where kind of this cutoff is. If your claim's within about a 3-week window, satisfaction was actually up in this year's study. So the industry decline was exclusively due to these longer tailed claims taken beyond 3 weeks. So, and a lot of that disconnect happens where they feel like, that those expectations weren't managed right out of the gate, right? At that first notice experience, you're reporting the claim, getting services set up. So I think that's a really key area that's becoming more important than ever. Setting those expectations up front, but then clearly delivering on them, throughout the claim. So I'd say companies who, are integrating digital solutions we see as a great way to proactively give updates to customers. But then I think a new element that we've looked at this year is also really focusing on kind of the service consistency between the different touch points that they often have in a claim. I mean, we're seeing more and more there's multiple touch points in claims. And what we find is that, if you're not seeing a consistent level of service between the different reps involved, I mean, that becomes a really, I think, a dissatisfaction point for customers. We see a real big drop off. It's like a 200-point drop in satisfaction if they don't think they're getting similar levels of service. So I think that's another area that we're highlighting this year is really something new that we added to the study that we're really seeing be a differentiator.
Steve, do you want to jump in with any other thoughts or comments on 24?
So if I think about 2024, one word I would use to describe it is uneven. If we look back over the last few years, 2020, as consumers, we were seeing pretty substantial decreases in premiums, or we were receiving checks in the mail from our insurer because of all the premium relief efforts that surrounded the pandemic and the fact that we just weren't driving, and fewer miles driven led to fewer collisions and led to lower claims costs for insurers. Through 21, 22, 23, we've seen the reversal of that into massive historic rate taking by insurers, and that shows up in our premiums as much higher premiums than we're used to paying. Throughout last year, CPI numbers show that auto insurance was up more than any other component of CPI throughout 2023. And as we discussed a few moments ago, with more insurers achieving rate adequacy, I would expect that unevenness to start to manifest this year, where some insurers are not as aggressive with rate taking. They've achieved rate adequacy. Others, we see some large insurers reporting record losses still in 2023. In other words, they have some room to make up still in terms of their rate adequacy. They may be taking more aggressive rates, maybe not as attracting as many customers. So whereas the last few years have been pretty broad-based increases across the industry in terms of premiums, this year we might see more uneven Some insurers are flat. Some insurers are really aggressively up. And that behooves the customer to go out and look, go out and shop, and make sure that just because your insurer might take 15, 20% of an increase this year, it doesn't mean all others are. Whereas the last few years, in all likelihood, other insurers were doing the same thing. That might not be the case this year. So we'd advocate for consumers to keep an eye on their premiums. And if you're seeing an increase you're not comfortable with, this is a year where you may find a better deal again.
Terrific. Well, I think it's a great way to wrap up this conversation about 24. So if you want to hear more from Mark and Steve and Brienne, I know we have some things coming up, so you can please just visit our website at jdpower.com/business and look for the insurance practice on there. We'll have the list of upcoming conferences. I know, Brienne, you're speaking at a conference. Mark, you've got a webinar. Steve, we'll see you on Fox, I guess, coming up. And lots of other ways to connect with our team here. So Steve, Mark, and Brienne, I want to thank you for joining us today on the podcast.
Yeah, thanks, Mike.
Thank you. Yeah, thanks for having us.
Happy to talk insurance anytime.
Okay. And Carolyn and Dan, thanks for producing the podcast. And also want to thank our listeners as well. And we'll see you next time.